Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. Our show today is brought to you by commercialagentsuccess.com. Check it out. It's 21 one-hour videos with forums, all kinds of training there for commercial agents. Even the most experienced agents love it around the country. And you can cloud access the videos immediately, anytime. So learn more, visit commercialagentsuccess.com. Well, we have a fun show for you today. You know, one of the things that we try to do on this show is look forward to what's ahead of us, right? What should we expect moving forward with the economy, with commercial real estate, with the participants in the industry? Well, please welcome our guest. It's Tim Bodner, and he's a partner, and he's a global real estate deals leader with PwC. Tim, good to see you again.
Michael, good to see you. Thanks for having us.
Thank you. And so you guys just splashed your PwC Real Estate U.S. Deals 2025 outlook. So I'm really curious what you guys see moving forward because, you know, I'm a broker. One thing I like to see is more transactions. So tell us.
I think you're going to get them, Michael. I think we're going to get them. Look, listen, we, through the third quarter, transaction volume in terms of declines looked like they had reached a floor and have started to kind of turn around. And we do think deal activity is going to move higher from here. We think there's a number of drivers for that. One is just overall more constructive financing markets. Certainly, the cost of capital has been the issue, and surely with rates being stable and starting to decline, that's a much better place for things to be. So the financing markets are certainly part of the story. The regulatory backdrop and the passage of the U.S. elections are certainly part of the story. It certainly looks like we're going to have a much more conducive environment for M&A, kind of not just for real estate, but across the board. There's a lot of capital on the sidelines. And listen, while there's still challenges in certain sectors and certain markets here in the United States and around the world, fundamentals are still quite strong. And there's a lot of emerging sectors like data centers and others that are experiencing significant growth. So we feel pretty good about where we are at the moment and think that 25 is going to be a better year than 24 for sure.
That's awesome. And we're certainly seeing it on the broker end. Maybe we're one of the first levels to experience it. And we're certainly see that with almost every sector. I tell people that and they say, well, what sector, which property type? And it's really all of them. So I hope that continues. What about rates, Tim? What do you guys feel about interest rates moving forward in commercial real estate?
Yeah, so our view is rates are going to be higher for longer. We do think that we'll get an interest rate cut here this week, likely around 25 basis points on the short-term rates. We do think that the Fed is likely to take a pause in January and then restart with 25 BIP cuts thereafter as we move in to 2025. But, as I think we've talked about in prior shows, and I'm sure you see it in your business, the Fed's in a position where they don't have to rush their pacing here. They can afford to be patient with the economy where it is. Certainly, we got another inflation number last week that still saw quite significant services inflation in auto parts of the auto industry. So they have the ability to be patient. So we think that's what will happen. We'll get a cut this week, and then we're going to take a break.
And Tim, with some of the recent happenings around the world in the U.S., you mentioned, the election. You mentioned some of the recent inflation reports, and you got Trump's team talking about tariffs. Some people are concerned there about inflation. Does that lead you to higher rates longer than you did maybe 2 or 3 months ago?
So listen, it's certainly a potential headwind that's on the horizon, tariffs being that is, but there's also, potential inflationary pressure around some of the border security initiatives that are being proposed. So we'll see what happens. I think the overall view based on the work that we've done and folks that we're going to interact with is it really depends on the tariff side, how significant of tariffs there are and how broad based they are. If they're targeted, at certain parts of the world and certain parts of the economy, and they're more modest, then we think that the impact on inflation could be on the margins. But if there's broad-based universal tariffs somewhere at like the 10% level and above, that could potentially pose, a significant headwind on the inflation number, which, as you said, would give the Fed more reason to pause and not move as quickly on the interest rate decreases from here. The other thing I'll mention, Michael, is I think the reality is we'll have to see what happens, but I think there is a view out there that we hear quite often. In fact, I just got off a call about it a minute ago, where some of this, in terms of the percentage that have been put out there initially, may just be kind of an initial starting point for a negotiation. And so, certainly, you've seen world leaders across the globe already start to engage in interactions with President Trump. Some have been invited to his inauguration here next month, and so let's hope that is what in fact will happen, and that we won't experiencing significant and growth in inflation and have the risk potentially of interest rates needing to go back the other direction, which would not be helpful to the real estate industry and the economy across in general.
Yeah, well, that's interesting. I've doing a big presentation into this week to a client, and it'll involve selling a bunch of properties. And then we were talking about interest rates. And I went back and pulled some research from '02, where I did a very similar project. And in 2002, and in part of the paperwork in '02, the discussions were, wow, these are great, fantastic low interest rates. Take advantage of these rates. And then I looked at the numbers in the presentations, and they were in the six range. They were in the sixes. you know?
Well, I mean, and I think you've focused on this point in a number of your shows. I think the absolute level of rates is not in and of itself the issue. The issue was the pace of it with which we had to deal with it. And so the question, to your point, as you are appropriately saying, is, can the industry survive where the 10 years in the fours?
Mm-hmm.
The answer is yes.
Yeah. And the expectations, though, for you guys are that they'll still just maybe lower a little bit the Fed's rate in 2025, maybe 50 basis points total? What would be your guess?
Yeah, look, I mean, it's hard to know, and a lot depends on what we were just talking about. I think, where it seems to be the consensus is right now is somewhere between kind of 50 and 75 basis points starting after the January meeting. So 25 here in December, a pause in January, and then sequential cuts of somewhere between around 25 basis points over the balance of 2025.
Okay. So, Tim, what should real estate participants think about? What are some moves, some opportunities in 2025?
Yeah, listen. So, big themes that we're highly focused on is the capital markets continue to evolve and transform significantly. Certainly, the role of private credit is a part of the narrative. The number of businesses on the capital side that historically have spent all their time in public markets, the rotation into private markets kind of continues at an accelerated pace. Certainly, the private credit side is part of that story. As a kind of a related point to that, insurance company capital, which is primarily being funneled into credit, is also a big part of that story. I think what it means ultimately for real estate is a bit of a let's wait and see what happens. The CMBS market has come back, but the notion that capital is out there and will be significant and meaningful is something that we are highly focused on. We see it with our across our client base and around the world, and so that's the first point I would highlight, Michael. The second thing on the capital side is everything around retail capital. I think the reality is around the world, there is a significant shift of more individuals being responsible for their own retirement. There continues to be an acceleration away from defined benefit plans, away from governments providing retirement solutions, and into the individual being responsible. As part of that, there's only a certain number of investments that are likely to be able to produce the rates of return that are needed in order to provide for retirement over the expected period of time. So the great fortune we have is that people are living longer, they're healthier, which, while that is a good thing, as I mentioned, it also puts pressure on the retirement system. And so private markets need to be part of that solution. It's possible as part of this next administration that we'll get reform on the 401k side in where it's needed, which would open up a significant amount of capital that would go into alternatives, which would be another source of capital available to the industry. So we are highly focused on what happens in the retail channel. And to be clear, that's not just a U.S. phenomenon. That's a global phenomenon. That dynamic of the shift from defined benefit to defined contribution and more being on the individual is happening all across Europe. It's happening in Asia and places like Japan. Certainly, Australia, has in some respects been a blueprint of this. But the retail channel is going to be a more meaningful part of the market. So we would suggest folks focus on that. And then the third thing is just the growth of emerging sectors. Certainly, the investable asset class is becoming much wider in its scope than it has been in quite some time. Certainly, the data center story is part of that. We're happy to go deeper on that if you'd like. But other sectors that we see is wellness. We had a couple big deals announced here in the last couple of weeks. We think that's going to continue. The investors expanding into sports adjacent real estate is certainly continuing to see a lot of growth potential. We've now had our first dedicated sports investment business publicly announced at this point. So this growth into alternatives, Michael, where there's these strong secular trends that are enduring, is where there's a lot of growth. And when investors are seeing some softness in some of the traditional asset classes, that's a spot where they're looking. So those would be the kind of the top three. Mm-hmm. The final point I'd make, and you kind of alluded to this, Michael, in your comment, is that across the board, even in the traditional sectors, volumes are in a much better space. Certainly, we can spend time talking about retail, which has been doing, continued to do quite well. Parts of the office sector are doing well, logistics. So it's broad-based, but this widening is something that I think is really fascinating, and it's something that we would encourage folks to give some thought to.
Yeah, I was drug into a mall this weekend.
Yeah,
kicking and screaming, and it was packed and busy. It was a lot of people.
I mean, listen, I think it just goes to show you that this point we've talked about in the past around people wanting to be out and about and with each other and being part of an experience is an enduring trend. And certainly you're seeing it with the and I think you just kind of alluded to this in your comment. The mall landlords are all trying to figure out how do they enhance the experience at their centers, and certainly the reason for that is what we're talking about.
Yeah. Well, I like the people I was with, but I didn't like being in the mall. I was not a big shopper, but well, what's the outlook for office overall? Any comments there?
I think it's it's certainly still a story about quality. It's a story about amenities. It's a story about age, and that the well located assets with lots of amenities that are newer are doing quite well. I mean, I was looking at some numbers for New York, and New York is doing really well. There's still pressure in other markets like San Francisco, as an example. So there's still challenges for sure to work through in the office market. We are also seeing it come through in some of the delinquency rate trends, and so that's gonna take some time, Michael, as I'm sure you agree, for that to get fully sorted out. So I would say kind of still about where we've been for the last year or so. There's places where there's more challenges, but there's also a lot of bright spots. I think the other interesting thing to see what happens is, particularly in DC where I live, is, if with the new administration's push to get government back in the office in DC, does that turn the DC market around in particular, but does it also have kind of tangential impacts on other cities?
Yeah, I mean that seems like a push and pull there. Yeah, get the employees back, federal employees back in the office, but are they also going to reduce some of the federal bureaucracy? They're going to thin the ranks there. You know.
And that was already starting. I mean, we've seen the GSA and other related parts of the federal government that oversee the real estate portfolio in and around the district, pruning their portfolio and consolidating offices and reducing space. So I think what you said is spot on, and we've got examples of that we've already seen happen. Now, your point on whether that picks up is a great one to mention, and we'll see what happens to
Yeah.
see how much consolidation there is among agencies.
Yeah. Well, you might find this interesting. I not the first part, the second part. I sell government leased buildings around the country, and I was at a GSA meeting. The commissioner was talking about how they're going to reduce their space, and because they're going to be able to all work from home and hybrid, and how great that's going to be. The next day, I'm selling a very large GSA leased building, and the lady who runs the whole office there said, "There's no way that these people are not working at home. We're not getting anything done. This is terrible. I've got to have my people back." So, leadership saying one thing, and then the leadership having to responsible for getting work done. It's like, no, this isn't working. Pretty funny. Well, let's talk about another thing that people are curious about in our outlook is the amount of distressed real estate that might kind of work its way through the system. We've had a lot of extensions and extend and pretend, that sort of thing. What do you expect for 2025?
I mean, listen, it's the most pressure continues to feel like it's in the office. Part of the market. We think that'll continue. That will create an impetus to transact. There's something that we're working on, that we just started working on, where that's exactly what's happening. Well, I think we'll see more of that. Having said that, we continue to not see broad-based distress on the horizon. We continue to believe it's not going to be what was experienced, in prior market environments. And listen, if the banks get further relief around certain around certain elements of the capital related framework, including, for example, things like the Basel III Endgame, and they have more flexibility to work with borrowers, that's a good story for real estate. And again, as I mentioned, the financing markets feel really open to us. CMBS is functioning. The insurance companies are back. Even the large banks are lending, but through different channels. The only market participants who really aren't back at this stage are the regional banks. And so that's the part where there continues to not be a lot of renewed activity. But again, back to the distress, we don't see it outside of the office, and just in terms of changes. And I think that the story on the office side is consistent with what we thought was going to be the case.
Yeah, it seems like it helps everybody to kind of work through certain borrowers. It doesn't help, but it helps the overall industry to work through those and get the banks healthy and get those run through the system. All right, so let me see if I can recap a little bit. So rates higher for longer, but a little bit of reduction maybe in 2025. You expect transaction volume to continue to increase. And what else would you leave our audience with to think about as we finish up here for 2025?
More capital coming into to alternatives and private markets. Real estate is part of that story. That's good for our industry. We think there's favorable tailwinds that are going to come through the new administration, whether it's on the overall regulatory environment and the tax front, tailwinds from a regulatory environment, and again, the real estate industry just keeps getting bigger, and these new asset classes are going to be an important part of the story moving forward from here. And so it's something that we're spending a lot of time and I think understanding how to participate in that growth and the returns that are going to be generated is something that we would suggest being top of mind.
Well, Tim, is there enough power for all these data centers and electric vehicles and everything else?
Listen, within the last week, a number of the large energy businesses in this country announced a number of initiatives to create more power, whether it's through gas. We've also seen a number of the alternative asset managers talk about building industrial parks that have power that are behind the meter and power. So listen, there's certainly a lot of capital moving into that. The issue is the speed, right? And so I think if you look at some of what the new administration has promised around speeding things up and making certain permitting processes easier, that should help. But it is an issue for sure, Michael, and something that needs to be focused on and could act as a headwind to the pace of growth over time.
Yeah, many comments on the outlook for oil, for gas prices. It seems like when you think about price increases and inflation, everything has to be driven somewhere. It seems like gas is a big thing. Do you expect the prices to lower any? Or?
Listen, things feel like they're in a good spot at the moment. I think the biggest question that we have out there, Michael, is just what happens geopolitically around the world, and to what extent do certain parts of the world feel impacted by some of what we do here in the United States, and they use the energy supply framework as a way of instituting their own tariff per se against the United States. And so it's certainly an area to watch. But I think when you look at energy prices, including in the last inflation print that we got last week, it was pretty benign. So feels like we're in a good spot. But the geopolitical environment is something that could, as you could impact that quite significantly and quickly. About where supply levels go.
Yeah. Well, I hate to have to pick up clients at the airport showing properties on my motorcycle because prices are too high. All right. Anything to part our audience with for 2025 as we end this one today?
No, we feel good, Michael. Thank you again for having us. Always great to see you, and thanks again.
Great.
Happy holidays.
Thank you. Happy holidays to you, and thanks for joining us. And thank you for joining us around the country. Appreciate you joining us. Appreciate you sharing the show. How you commenting on the show. Reach out to me if you have any questions, thoughts, ideas. My email is a real easy one. It's michael@bullrealty.com. Until next week, be sure that you always lead, learn, and laugh. And join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate sales, leasing, and advisory services. Visit bullrealty.com or reach out to me directly. My email is michael@bullrealty.com. By ShareFile, designed with real estate and other highly regulated industries in mind, ShareFile offers secure digital solution to simplify workflow and improve collaboration. Visit sharefile.com.
by Commercial Agent Success Strategies, 21 cloud-accessed agent training videos. Learn more at commercialagentsuccess.com. You're invited to subscribe to the show wherever you listen or watch the show. You're also invited to subscribe to a weekly email announcing the show topic and guests at creshow.com. Thank you for watching, listening, and sharing America's Commercial Real Estate Show.